This is Trend Following Radio, where great thinking comes alive. Nobel Prize winners, legendary traders, best-selling authors, and the pros that know what drive us irrational human beings. I am your host, MICHAEL COVEL. Not filtered, raw, honest. That's my passion. For anyone who has listened to this podcast, for anyone who has read my book, Trend Following, you know I'm a big fan of Dunn Capital Management. Founded by the legend Bill Dunn, now run by Marty Bergen, this is one of those trend-following traders. They're a benchmark. I mean, if you look at their publications, if you look at their writings, and you want to either invest or just learn, they are cream of the crop. I mean, they are really, really bright people working at this game for over 4 decades of an uninterrupted trend-following track record. That's pretty damn amazing. There's not many companies on this planet that can state that. A 4-decade, going on close to 5 decades of a continuous track record. That's amazing. And beating the S&P by a decent margin. And when you look at it compounded, wow. My guest today is Jenny Kellams. She is the Director of Investment Strategy at Dunn Capital. And no, this is not a big infomercial for Dunn Capital. That's not the point. But it's all about learning. It's about getting behind the scenes and understanding a strategy and understanding a person. And in this case, Jenny, understanding how she got to Dunn Capital, her attitude, her moxie, what drove her. There's lessons in that too. So yeah, take away the investment strategy insight, but take away the insight from how she navigated her career. That's inspiring. Without any further delay, let me jump right into my conversation with Jenny Kellams of Dunn Capital Management. Take me back to a point in time. You, female representative in the finance space, the registered investment advisor space. Take me back to how you broke in to Wall Street. The very first thing. What was the pivot? How old were you?
Growing up, my dad had an accounting and finance background. He was the first in his family. He came from a farming family in Indiana. Both my parents are from Indiana. He went to IU. He was the first to go to college. Growing up, I enjoyed math more, but my dad loved investing. He was a controller at a big company that was in the paper industry. He would get the daily graphs. He would start talking to me about investing and using fundamental analysis and technical analysis combined. And this is what we did sitting around the dinner table as I talked to my dad about stocks.
How old were you?
Oh, I was probably 10 or under, pretty young when I started. And then his best friend was his broker at Merrill Lynch. His best friend, Grant, also had gone to IU, so they were huge Hoosier basketball fans. And me being the little defiant one, decided I was always going to root for Duke just to get them both riled up. Grant would come over to watch basketball games. They would talk about stocks and investing. I'd be rooting for Duke. And I thought Grant was the coolest big brother type you could have. So from a very young age, I always wanted to be kind of a stockbroker, because back then you called them stockbrokers. Then we started traveling to money shows, which I don't even know if they're still around. But we went to these money shows and my mom and sister would go out shopping and I'd go to these conferences with my dad, listen to all these speakers, Sam Stovall, all these different people about investing. And I just thought it was fascinating. I remember very clearly always knowing that's what I wanted to do. So it wasn't even a question when I went into college and kind of getting out that was always going to be my path.
When did you realize it was rare for a female to have this ambition?
I think when I first went, well, it's kind of a funny story. When I first decided to try to get into the business, I was living in Gainesville, Florida at the time. Grant, who I was my mentor and kind of big brother type, he had been a broker at Merrill Lynch. He said, if you ever get into this business, go work for A.J. Edwards. At the time, they didn't have proprietary or big trading kind of account. They weren't going to make you push certain stocks, which Grant was trying to kind of keep me in something that he thought would be good. And So I went to this little branch in Gainesville, Florida, and the branch manager looked at me, and I was probably a year out of college because after college, I graduated in 99, and then I spent a year trading for my dad. It was the tech boom, early 2000s. So I was living in another location for just a year. I was also doing options on futures, which then I ended up pitching to Bill years later, which was actually really funny. But I went into this little branch in Gainesville, basically said, "Hi, I'd like to be a financial advisor. Here's my resume." And I basically was laughed out of the office. Who is this, excuse me, but little girl? I was probably 23, maybe 22, 23, and I probably looked like I was 18. They just kind of were like, "Who are you? Why are you here?" "No, we only take, experienced people, licensed, and have a book." So I went home and called Grant and said, "They're not even going to give me an interview." Well, he happened to know this guy's boss's boss or something. So they called the regional, they called me in for an interview, I think just to appease the upper management. I kind of told them what I wanted to do. And again, I think they thought I was a little nuts. I have a network, and this is kind of how I want to build out my network, and this is my plan. And so over a couple of interviews, I actually got the job. I think they kept thinking, "Oh, well, surely she just wants to be an associate or work for whatever." And I was like, no, I want to be my own advisor. This is what I want to do. It was pretty funny looking back now. When you're young and inexperienced, you think you can do anything.
You did that for 7 or 8 years?
I did. I was with A.G. Edwards for, I think, almost 3 years. And then I was recruited out to be independent for a bunch of different reasons. I had started building my business kind of around the country. My sister was working for Pfizer. She still actually works for Pfizer. And a lot of her colleagues actually started using me as their advisor. And I sort of became the Pfizer guru of their 401k, their stock options, their pension, all their understanding of their benefits. I started building kind of a base of clients that were Pfizer. And then the other half of it was really physicians. That was sort of my niche. And from there, I went independent. I was independent for 8 years. Marty Bergen, who is our president and owner here at Dunn, I had known since the late 90s, early 2000s. He was a mentor of mine, and actually he was a client of mine. I think he just kind of threw me a little side money just as my mentor.
Hold on, you're jumping steps on me. How did you connect with Marty?
Marty moved down in the late 90s to work for Bill. He'd come from the DC area. He was on the audit team and a partner at a CPA firm. Bill hired him away, convinced him to come down to Sleepy Stewart. When he moved down here, his next door neighbor was a physician that my sister knew because she worked for Pfizer. She was working down here. This physician said, "Oh, you're new and Marty's new. You two need to meet and be friends because there's not a lot of young people that just moved to this area." So they connected them and they became friends. And then my sister introduced me because I was in finance already and said, "Oh, you might want to talk to this person." And then I just sort of realized the opportunity of just getting to have somebody that had all of this experience. And so I would pick Marty's brain, and he really was a mentor. And
let me get you to slow down on this. So when's the first moment, the light bulb moment, where you either figured out how different or what Dunn Capital was doing? The first moment that I know for me, because I visited the office for the first time, I think in 1996. So what was that moment? When did you realize, oh, wow? Because I could think back, and I was doing all this research in the early to mid 90s on trend following traders. And my father was working with Marty because my father was a doctor in the Northern Virginia area, and Marty was doing CPA work with their office. One day my father looks at me and he says, "Hey, Marty's doing CPA work with the best trader in the world." And I'm like, "Shut up, Dad." That's not true. So now I'm like going through the old Stark book or something. It's like this 2-inch thick manual. And I'm getting to Dunn, who I've never heard of. And there I'm comparing, hold on, maybe he is the best trader in the world. I'm looking at the numbers. So when was your moment where you had this light bulb, when it all kind of came together and you're like, oh, wow, this guy, Bill, really has done some amazing stuff?
My light bulb moment wasn't until years after I'd actually met Bill. Right out of college, I was trading for my dad in stocks, but then kind of a family friend of ours that I'd known my entire life, somewhat of like a second grandfather to me, he had retired from Publix. He had been an executive of Publix since they basically started. He was trading options on futures of the S&P 500. And he knew I had graduated with a finance degree. He knew I was doing some trading. He was doing this strategy and he brought it to me and said, can you help me with this? I really want to. He wanted to write a book. He wanted to really kind of hone it. And I started evaluating this. And again, this was probably very early 2000s. I was right out of college. So maybe 21, 22, something like that.
How did you get in front of Bill?
Through Marty. I started doing this options on futures trading at the same time I had met Marty in the early 2000s. So it was sort of coordinated time frame. And then we had been trading it for a couple of years, had an absolutely insane track record. I mean, huge returns. I was trying to build out this systematic way to do it. So of course, I was telling Marty all about it. So Marty said, because he was working down here for Bill, he said, why don't you come down and explain your system to Bill? If he likes it and we can do something with it, then we could figure something out. And I thought, oh, that's cool. Not having any clue who Bill Dunn was. Again, I'm like a 22-year-old that looks younger and female.
Pitching to a PhD guy who's done extremely well.
Well, yes, and back then there wasn't Google. So you didn't like type in Bill Dunn into Google and then get your reality check. I didn't have that other than, oh, Marty, my mentor in finance, tells me to come down and pitch to his boss. They're down in Stewart. Okay, I'll do that. I put together my track record. I put together a little PowerPoint and I drove down to Stewart. I was in the office with Bill, Marty, Pierre, and I think Kurt was in there. And this is when they probably had maybe 6 or 8 people that worked here. I pitched this. I was all proud of it. I mean, it was hysterical. Now looking back, I think it's like the funniest thing ever. I pitched my idea and Bill looked at me. He let me get through the whole thing. He looked at me and he said, that's the craziest thing I've ever heard. You are insane. I wouldn't touch this with a 10-foot pole. Do you understand the type of risk you're taking? How have you not blown up yet? And if because you haven't, you're going to soon. I was like, okay. And I took his advice and I realized, well, I don't know what I'm doing. So fortunately, we unwound kind of the system and I didn't lose all of my money or my mentor's money. And I had some family money that were trading because I was doing well. So it was pretty funny.
So when did you have the moment, though, where you now got who Bill was, got what he was doing, and realized the scale? Because, I think the weirdest thing about coming to your office in Stewart, Florida, people that can read the headlines and stuff, and they can read the firm history and read about everything, you kind of expect a New York City tower. You expect look, your offices are very nice. I'm not saying that. I'm just saying, but your expectation as a young person is like some glass pinnacle steel thing 100 stories tall, and Stewart, Florida is not that.
No. And we own the building. It is a quite beautiful building here on the river in Stewart, right on the water. And you get up to the 3rd floor and you come out and there's a phone on a table that says, push this button. And so it is pretty funny. There is no reception area or... It
was worse in 1996.
Right. Well, I remember that when I came down in the early 2000s before they redid this building. So I remember that. But I would say my aha moment was probably a couple years into being an independent advisor and realizing, talking to Marty, how amazing their strategy was, but I had no access to it. So I couldn't allocate it to my clients because it wasn't on platforms. It wasn't available for retail. I would have had to advise my clients to take their money, leave my book of business and go directly to Dunn.
Let me stop you. I got to take you back a second there because there was something you jumped over. You said, how did you say it? I saw this amazing strategy. Then you're now talking about clients. Hold on. When you first heard what these guys were doing, what Bill and his shop were doing, what Marty was doing, did you know about trend following trading? Did you know about this style of trading?
No, had no idea.
I mean, for me, maybe I'm just nuts. That's quite possible. Okay. But for me, I was just like, this is amazing. I was not a guy I got my MBA, but I didn't have that CPA background. I didn't have the CFA background. I didn't have any of that stuff. I felt like Warren Buffett and balance sheets. This is a completely different animal. Look, of course, there's a lot of genius that goes onto the trend following systems that you guys employ. I would argue a lot more of the genius is probably even more so in the discipline to adhere to it. I just remember thinking, this is unbelievable. This is just, how come the world doesn't know about this?
That's exactly what I thought. It's like the best kept secret on the planet. And yet when you do try to tell people about how incredible it is, it's so contrary to mainstream that it's a very uphill battle. When I first heard about it, I thought, this is incredible. How do I incorporate this into what I'm doing? It's totally different than how I was raised. It was totally different than how I was trained. You buy something that you think is undervalued, you're trying to do prediction, you have all these emotions that you're managing. I mean, that's the biggest thing as an advisor is you're trying to manage people's emotions and help them make the right decision at difficult times. And this takes that away. And it's amazing for that. I mean, it gives me so much peace because it takes out, we don't have an emotional aspect to our system. We don't have a predictive measure to our system. We're not trying to predict. We're just identifying trends, going long or short across the markets. And it is amazing.
Let me keep you at that thought. Let me just keep breaking this down because there's a lot. I thought about our conversation today and I'm like, okay, you obviously know that I've been in this kind of world forever too. And I just thought I'll get an interesting new person on to really kind of come at some things granular. And so a lot of things that you and I might talk about, we sometimes don't think about how they might sound to the average person. If you say to the average person, doctor, attorney, etc., if we say no prediction, I think a lot of people just kind of in some ways tune out right then because they are completely clued into the idea that there's a guy or gal with a crystal ball or some kind of education, some kind of talent, something that enables them to see what the average guy can't see. How do you start to work with people to get them away from the notion of predicting tomorrow versus reacting to tomorrow?
Well, I love getting into, you're absolutely right. People love things that they can understand, things that are easy, things that are predictable, control. They're always looking for that crystal ball because I think they want to feel like they have some kind of one up or one leg up or something to get ahead. I think when you tell them to our core, we believe all information that's available is going to be influxed into price. Therefore, the only data we need is price data.
Stop there for a second. So let's talk about that. So look, the average person, doctor, attorney, et cetera, they say, oh, I got my Wall Street Journal, I got my IBD, I got all this stuff. So I'm going to study all of these numbers, all of this data, all of this analysis. Then somehow or another, assuming that I've got the right 1,000 points of data, I can then predict tomorrow. When you say it's all embedded in price, what do you mean?
As a trend follower, if you're not trying to predict, and you're just trying to identify and profit off of a trend and more of a medium to long-term trend, ultimately the only data you need is price because it's already influxed all that information. If you were trying to analyze, I've been to conferences where you'll hear somebody talk about the pigs in China and how the demand for pork is yada, yada, yada. And they have all these analysts that come in and talk about that. Or you have all the pundits. I mean, I listen to CNBC all day just because I know that's what advisors are listening to and individuals and probably even institutions. So I want to hear what they're hearing. But everything on there is about a story and these people's conviction towards. And what's funny is people will believe somebody's conviction. If they heard you and you had this high conviction and they believe you and they would trust your opinion. Yet you have a conviction and a signal and a tried and true tested system that has been in actual trading since 1984. And yet they're like, well, how do we really know that the system, it's mind boggling because every portfolio manager, there's a zillion portfolio managers out there that have done well, but no one can predict regularly or routinely correctly all the time. It's impossible because none of us can see the future.
If you say 1984, though, I think, okay, that's for the particular WMA program that you guys are famous for. But the actual Dunn track record going back in time is what, 10 years before
74.
That? Okay.
So 45 years.
Yeah, that's nuts. How many continuous track records exist in America? Not just a buy and hold mutual fund that doesn't really have to apply almost any mental energy to do that. They just do whatever the market does. But how many, I guess Buffett is one. Buffett has been at this for a long time. Dunn has been at this for a long time. I'm sure there's some other names that I'm not aware of, but there's not many at this length, is there?
No, there really is not.
Take me back in time a little bit from your own experience. If there's anything you want to share, any interesting insight beyond Bill giving you that great insight about your option trading strategy, maybe anything else that I still remember, how did he phrase it? I've said this on my podcast before, so I hope I don't screw it up. I believe when I met him, he was the first person I met in the office. I went down there for an all-day thing. Again, I think Marty got me to come down there, and it was before he was working there. I believe Bill shook my hand. He had a very strong handshake. He looked at me and he said, "Did you come down here to press me?" I think that's what he said to me. And I remember, it's like no one's ever said that to me before, since, maybe for the rest of my life, no one's going to ever say it. And there was such a presence about Bill that just you walked away, even if you said to yourself, well, gosh, I might not be this guy exactly in my lifetime, but you walked away with a sense of, damn it, no excuses, go do something. That was my feeling.
Mm-hmm. He has that presence. And I have such good memories from a couple things. And one, I think you'll get a really big kick out of, because anyone that hears a story thinks it's great. And especially if you have any history of understanding Dunn or Bill or kind of that presence you're talking about. So fast forward, I started in the business in 2000. Back up, I was independent for 8 years. Marty had always been a mentor to me, and I'd always stayed in touch with him. I loved being independent. I love my clients. I love my practice. I love being an entrepreneur, doing my own thing, freedom, flexibility. There's a lot of really incredible things about being in that business. And I had no intention of ever stepping away from that. And Marty called me in late 2010. I had just come back from a 3-week trip to Italy that was just blew my mind. It was an incredible trip. So I couldn't wait to tell him all about the trip. Well, he was calling because he said, "Oh, I've entered into this succession plan with Bill, and I'm going to be buying out the firm. And I'm calling because I wish there was some way you could help us kind of take the business to the next level, grow the firm. I'd love to talk to you about this." I laughed at Marty. I was like, "Oh, that's funny. Why would I ever do that?"
Why would you never do it? Because you didn't think it was a good opportunity, or why is he believing in you? Why were you laughing?
Well, I was laughing because in my mind, I loved what I did. I had nothing in my head that was saying, "Oh, go do something totally different." Even though I knew it was a huge deal and I knew that they did fabulous, it was just, I had all this freedom and flexibility. I'd never intended on leaving that kind of career path. Marty sort of brought it up and I was like, well, I can't do that and this. They don't go together. Like, I'm not even allowed because of regulation. So it didn't even really hit me, but he planted a seed that a few months later kind of resurfaced. And I called him up and I said, let's just have a conversation. I just need to have a conversation. So then I'll come down and kind of see what it's all about. I need to at least explore it. My initial reaction was, I just came back from this great trip and I love my life and I have freedom. And why would I go work for somebody and do that when I'm happy? And then it started wearing on me. I called him back up. I came down to Stewart, met with a lot of people. I did not meet with Bill that time, the first trip, but I talked to everyone in the office. After that, Marty said, well, now you need to come back to meet with Bill. And at this point, obviously, I knew a lot about the company and I knew a lot about Bill and I knew about how he's this legend. So I got nervous and I said, Marty, what do I do to prepare to meet with Bill? I'm no longer this 23-year-old naive girl that came in with a future strategy. And he said, oh, I have no idea. You'll have to figure it out. He gave me no clue what to do. So I racked my brain, and with the help of people, I'd call them and ask them what they thought. I actually built a spreadsheet of a forecast of profitability of investing in me instead of his own system. Because I was like, Bill invests all of his money in his own system. That's how much he believes in it. So if I can show him the return on investing in me and how this business could grow, and that's what I did. So I came down here and I really was just hoping and praying that I did not look like an idiot in front of Bill Dunn. I knew things work out for a reason. So if I didn't get the job, it was okay. But at the same time, I really didn't want to embarrass myself. So I came down here, met in Bill's office. He talked to me about my background. We spent a lot of time just talking about what I had done and different things. And then I showed him the spreadsheet. It is the funniest thing. So it was not, I am obviously not in the research department and I don't have a PhD behind my name, but I do know basic Excel and I am pretty decent at math. So I built out this spreadsheet. I explained it to Bill, and he's like, no, those numbers aren't correct. I'm thinking in my head, he's PhD in theoretical physics. How does he not get this? This is simple. So I walk him through it again. And I said, no, Bill, it is. And this is how it works. And this is what it's showing. A whole second time. Nope, those numbers are wrong. I said, well, actually, no, they're not. And I said, I literally step by step walked him through it again, like almost basic remedial. You're trying to like help somebody see this. And I'm thinking in my head, like, this can't be right. I know my spreadsheet's correct. After the third time I walked him through it, he says, you are correct. You may proceed. And then I knew he just tested me. He wanted to see if I could hold my own, stay convicted to what I had done, and if he could get me to waiver. The first 2 times when he walked me through it, I just thought, how is he not getting this? So we finish our meeting, and this is the best part. He says, well, let's go to lunch. And I said, okay. He's like, we're going to go to my favorite place, Conky Joe's. I said, okay. So we go down and get in his little 2-seater Porsche. I start asking him how he started Dunn and just making conversation. And he tells me about that. And we're driving to Conky Joe's. And he said, listen, we have to start with the conch fritters. And then you have to get some conch chowder. And I love seafood, but I hate conch. That is not my thing to eat. Of course, I had conch fritters and conch chowder and pretended to like it. But it was really, really funny. We just had a great lunch. And I came back from that lunch and I said to Marty, Bill was absolutely lovely, but I don't know that this is going to happen. I just think it's probably not the time. I just didn't get the sense from Bill that this was the direction. And then a couple of weeks later, Marty called me up and said, Bill came in, I guess, told him, I don't know why we wouldn't hire her. So
I have to share with you, I don't recall the exact year. I don't recall who was in the room. I know Bill was in the room. And I was with a group of people. I was just there kind of to assist in some ways because the guys that were there were not really kind of trend following experts. And I think I was along for the ride kind of thing. So it was in a conference room there somewhere at Dunn. I would say between 98 and 2000, something like that, or 2002. I don't know. I don't think you were there. But I remember being in this room with all these folks. And again, it was kind of like they were pitching Bill on how they could expand things and all that kind of stuff. And they were using all kinds of jargon, just jargon. And I kind of was sizing him up and I was thinking, oh man, maybe, God, I don't know when this was. I wish I could remember. But anyways, I kind of felt like these guys are screwing up. This man doesn't want to listen to all this jargon. And I just kind of got to my turn and I kind of interrupted. And I said, I think one of the biggest problems with this industry is these damn terms that no one understands, like managed futures.
Futures, yes.
Managed futures is what I said. And the guys that I was with, there was like 2 or 3 of them, they just turned ashen. Somehow or another, I had just screwed up completely. Then there was a pause. And then all of a sudden, Bill pounded the table. He's like, I agree. I don't like these terms either. And I just started laughing. I started laughing to myself. I was like, oh my gosh.
That's awesome. But those moments with Bill, I mean, he really is priceless. And I think what's wonderful to have Marty as our president and owner is he had so many years with Bill. And in some ways, he's kept a lot of those tried and true things here of our culture. At the same time, he's really taken it into the next Dunn 2.0 of so much emphasis on research. But a lot of Marty was groomed by Bill.
Let me give you one that I just noticed in your deck, and I want you to explain it. I've asked you for a couple explanations so far, and I might kind of backtrack a little bit. Let's pretend this audience doesn't know what the blank trend following is. Let's pretend just they're smart people, but they don't know. So if I'm going through your deck and I see not a beta shop, that probably I can think of doctors and attorneys that would need some explanation. The floor is yours.
I think one of the most fundamental things about Dunn, or one of our core values, is really being client-centric. And I think a lot of companies strive to be that, and I'm sure that they are. But I think what's interesting about Dunn is we really prove it in the way we do things. First up, we have never charged a management fee. We are 0 and 25. So that means we take 25% of net new profit. So if you invested money with us and then you made money, we would take 25% of your profit, and then you'd have to exceed that old high before we would ever take another dollar. So right up front, it's extremely fair. But also, it really drives everything we do with the system in order to make sure it's as robust and dynamic as it can be, because that's the only time we make money. And then the second side of that is we eat our own cooking. So we are, I think, the largest, if you look at all of our proprietary money, individual investors in the system. I think about 13% of all of the money at Dunn is proprietary. And we trade our money identically. We just don't charge ourselves the fee, obviously.
Let me keep pressing you a little bit to use a Bill term.
Okay.
There's plenty of people listening right now that if they hear the word beta, they might be thinking of their neighbor that drinks too much soy milk. So I'm pretty certain that the people that I know at Dunn, whether it's Bill or Marty, I don't think have been huge soy milk guys. Best in my memory.
That is true. You will not find soy milk or almond milk or any of those things in our kitchen back there with the coffee.
So speak to the word beta, though. Break it down. You're talking to my mom now. My mom's 75 plus. Get to the word beta. I want to hear the explanation.
So I think beta in our sense is that you can have the standard basic trend following system that is almost turns into like an index. We are not striving to be that. We're striving to be best in breed, actually provide compounded growth. A lot of our peers are trading at lower volatilities. They're looking for absolute returns. Their system was really set up initially, I think, mostly institutional. And then they stuck those really large names of firms into packaged products for individuals. Because of their low vol, they're more of an absolute return. We've gotten it too, where fund of funds come to us and they say, oh, why don't we'll put you in our fund, but then we just want to cut out the fee and just give us your beta product. So beta to us is kind of 3 iterations ago of just basic trend following. It wouldn't be our top shelf anything. We don't believe in that. Why would we want people to not have the absolute best version of our system that they could just to get a little fee on it?
We know in the last handful of years, and I'm not trying to criticize any one firm in particular, but we know there's been all kinds of debates and controversies in the quote trend following space. And people have said, well, this stuff doesn't work anymore, or it's too volatile and all that kind of stuff. And then when a March 2020 happens, it's the tried and true folks that stick to their knitting that actually make money when one of those big unexpected events happens.
Well, it's absolutely true. And I think when you look at, especially in the retail world, I come across advisors that have either used managed futures in the past, but they either didn't allocate enough to it to really make a difference. So it became kind of a headache to explain to clients why they did this, and they didn't have enough in there to really make a difference. Or 2, they invested in something that had such a kind of a low volatility vanilla or almond milk that it was...
We can call this the new soy strategy, right?
There you go. And so they've had bad experiences. And so when I go in and talk to them about how we're different, I think it turns into a conversation of, look, these other managers have had great systems. A lot of them target, let's say, a 10 or 11 or 12 volatility, something like that. The vast majority of their AUM may come from institutions who are trading a managed account. They can adjust their exposure however they like. But when you put those low volatility systems into a packaged product that does have an additional layer of fees for access, to not have to be accredited, to have daily liquidity, so on, there's an additional layer of fees. It really waters down an already pretty low return stream. People see that and then they just don't understand the true benefit. They don't realize when you look at ours, we've had a compounded growth return that beats the S&P since 84. And I mean, that's incredible. And if you showed people our annual returns, I think you'd be hard pressed to find somebody in a room that would say, oh, no, I don't want any of that. But then if you start showing them the monthly returns, then you might have a few people that are like, I don't know about that. It's really the kind of uncertainty of not understanding what drives a trend follower. We have a very lumpy return distribution.
Which is lumpy returns are against human nature. Even if people's human nature has no earthly idea what they're thinking about when they think of finance, trading, and investing, lumpy returns is still against human nature.
Absolutely. That is probably one of the most difficult things, because if you look at the overall compounded return, especially as a complement to a traditional portfolio. If you look at a stock, bond, cash portfolio, maybe even some real estate, and then you add trend following and Dunn in particular, you would be hard pressed to find a portfolio that would not benefit on a risk adjusted return because it provides such a different return stream. And most advisors understand that it's not correlated, that there's virtually no correlation to stocks. But I think their trouble comes in is they have a harder time getting their clients to stay convicted to it. It's just like anything. Everyone has such a short time frame of the way they judge things. Instead of seeing this as, okay, we have this portfolio for the next 10, 15, 20 years, and look how it could improve your risk adjusted return, and look how it could smooth out the ride overall and be additive. We live here in Florida, and I tell people this all the time. We're right in the middle of where hurricanes crop up. And if a hurricane gets named in the Atlantic and it's heading towards the southeast coast, and I don't have hurricane insurance, I can't call up the insurance company and say, oh, by the way, now I want some insurance because I see this storm coming. They won't give it to me. I try to tell advisors all the time and other people who say that, yes, this would be great, but I only want to own it when I really need it. Well, you're never going to know when you really need it. That's the funniest thing in the world to me. Again, it goes back to prediction. People want something that they can predict. Oh, I only want to be in this when it's good. I'm like, well, yeah, I mean, I only want to play on the golf course when it's 75 degrees and no humidity and not a cloud in the sky. Yes, but that doesn't always work out that way.
If we look at this year has been a really interesting, and I just mentioned some of the controversy for trend following in the last couple of years. But if you look at this year, it's really interesting. We have this March 2020 thing happen. I could feel it, even though I'm not running a fund. I could feel the anxiety building. And then it's so interesting to watch people that then the Fed does some hocus pocus and they re-elevate stocks and people are just kind of like, oh, forget it. I just need buy and hold. That's all I need now. Whereas this year, if you look at it through a different lens, you should be saying to yourself, oh my God, if there was ever a year that said, I need something more than just buy and hold, it's right now, regardless of the fact that they were able to hocus pocus and levitate stocks again.
Absolutely. I mean, the thing that I love the most about this, I realize that you and I both, we eat, sleep, breathe trend following. We're passionate about trend following. I've been here almost 10 years. It is what I think about and what I talk about for most of my day. But I look back at the way human emotions are. I love to study kind of personality types and explaining things, different types of personalities and thinkers and things. But you look back to the 80s, the star fund was the Fidelity Magellan Fund, run by Peter Lynch. It was, I think, the average annual return for a huge period of time was 30% or something crazy. They did a study of the returns of the people actually invested in the fund. And what do you think that they made?
They got killed on fees?
No, they actually lost money. No, their average annual return net of fees was 30%. The average annual investor actually lost money because they would chase either fear or greed, starts going down, they sell at the wrong time. It starts running back up, they buy back in because they're fear of missing out. And it is so sad to see. And that's one thing that I always go back to explaining to people. This is what's wonderful about trend following and Dunn system is that we've taken emotion out. We stay true to the system and to the rules. And as a complement to your traditional assets, you can see how much it will impact your overall portfolio strategy. It's just getting people to actually do that.
I'm sure I don't want people to inundate you necessarily, but one of the most interesting educational things that one can do is to observe, and I don't have these on my website or anything. I know there's all kinds of stuff that has to take place. But anyways, your deck, the 30, 40, 50 page, whatever. I mean, that's a real educational project. I mean, for sure. That's just a great piece of insight. And by the way, to add to the Peter Lynch thing, so here we are talking about a firm, your firm, founded by Bill Dunn, now run by Marty Bergen. A very complex thinking reduced to I'm not going to say simple rules, but reduced to rules that one can understand. So there's a lot of complexity in the thinking. There's no doubt about it. Now, if I was to contrast that to the example that you just brought up, the only thing I remember about Peter Lynch is that he talked about I don't want to say many, but for some of his stock picks, he would get from his teen daughters who would tell him what was hot at the mall. Literally, this guy still held out as a legend. And it's like, that was the strategy. And you and I both know that's not a strategy. That's just the 80s go-go throwing money. And he happened to be the guy sitting there for that 10-year stretch. And then it was all over.
Well, listen, I'll follow that up. And this is pretty funny, but my dad used to say the same thing to me. I don't know if he got it from Peter Lynch, but he used to say, Jen, if you see something at school that really is up and coming hot, tell me what it is. And I always thought it was his way of trying to get me interested in investing. And actually, when I first entered high school, which was, I guess, the early 90s or late 80s there, I'm trying to think back. No, early 90s. I told him to invest in Tommy Hilfiger. I don't know how much to this day he made on it, but it's pretty funny because when I got my first car, he said, well, you helped pay for this because of your stock pick. And that really hooked me too, because I thought, ooh, if I can just have an idea and make some money, I like this. But it's part of the reason that I really got into this industry.
As we wind down, do you think your path at making it to where you are today, do you see it as, obviously there's always a little bit of luck on how we meet people in life, but luck is a funny thing. A lot of people can meet somebody or hear of an opportunity and say, oh no, I don't want to go do that or whatever. But how do you see yourself in terms of being open to opportunity? Even though you described being a little nervous and all these things, you still showed up. And you weren't the only person that showed up to Dunn Capital.
Right. You're absolutely right. I think how you meet people and things always plays a part, but it's the whole age-old saying of luck is what preparation meets opportunity. I think I'm so passionate about, one, investing in helping educate people because I realize how much it's needed. But two, I'm so passionate about Dunn and our system because I know we actually really care about people and we want people to have a good experience and make money. I know individuals decide to invest with us. They have a qualification call with Marty. And I think that's rare that you actually speak with the owner of the firm and he's going to tell you, these are things you can expect. And that's so important whenever you talk to somebody about a potential investment, because, money is very personal to people. They look at their future or they look at their goals. You really want to set the expectation of what you could possibly go through over time and make sure that they're really prepared for that. So I think for me, I've always been really committed to education and consulting. I love working with people. I cover the United States. So I was always on a plane prior to this corona, but I was always traveling around and getting to meet so many different people, advisors, institutions, foundations, so on, that it's just fascinating. And I love to study people and how they think. One thing that really struck me, I've only been at Dunn for a year or so. I came here in late September of 2011. In early 2013, so I'd been here about a year and a half, I got the opportunity to go to New Zealand to play golf. And I'm a huge golfer. Anybody that knows me knows I absolutely am passionate about golf. I've been fortunate enough to get to play all over the world. And I got the opportunity to go to New Zealand and play Cape Kidnappers and Quarry Cliffs. If there's any golfers listening, they probably have heard of these courses or they should look them up because they're absolutely, it's like Pebble Beach on steroids. And I got the opportunity to go. And the person who owns both of these resorts and golf courses is Julian Robertson, Tiger Management, original long short legend. Right before I left for New Zealand, I happened to run into Bill in the hall at the office. And I said, oh, Bill, I'm going to New Zealand to play golf and I'm going to have breakfast with Julian Robertson. He said, oh, and he stopped in his tracks, Mike. He looked at me in the eye and he said, you realize he's a legend, right? I thought that was incredible. One, because yes, I knew Julian was a legend, but I also know Bill is a legend. And it was just kind of funny how he said that. So I get to New Zealand, I get to play golf. I have breakfast with Julian. My friend that I was there with, she was interviewing him for an article. And we met some of his grandkids at the hotel, and it was just very casual. And he happened to ask what I did. And I told him it was early 2013 when everyone was really making money in the yen. He didn't know really anything about trend following. The only thing when we started getting into it, he could relate it to is that he was short the yen at the time and making money. And he goes, oh, that's all. I mean, and then I'm struck. Here is a legend in an alternative strategy who has really no idea about this other legend. So when I come across people, I realize it is not mainstream. And we're committed here to making it mainstream. We really believe it should not just be for the elite. It should be for everyone.
I've sold 250,000 plus books in my first 2 books. What's 250,000 books in a world of 7.5 billion people? It's a drop in the bucket. I mean, really. I mean, I think a lot of people know about trend following based on stuff that I've done, but I do shake my head. I mean, I think it's still in many ways, well, okay, I think I've made a dent. I don't know how big of a dent. I mean, it's a tough egg to crack, isn't it?
It really is. It's kind of fun though. I will say it's exciting for me. Every new meeting or call is a challenge of really meeting what their prior experience, what their expectation of something is, and helping educate. And it's almost like an aha moment. When people get it, they're like, wow, I've really found something that I wish I had found a long time ago. You really see how much it can impact people. And that's what makes me really passionate. And not just about the whole industry, which I am. I love to see the industry be in the forefront, but also about Dunn in particular. I believe we have so much ahead in our future of growth, opportunities, and potential. And I feel like we're really committed to that, which makes me proud to be a part of this team.
The website is easy enough to find. I think I know it by memory. I don't think it's changed. Dunncapital.com. I think people can find their way to your shop and to you. Appreciate you taking some time today to chit chat.
Absolutely. Well, thank you so much. We can't tell you how much we appreciate the opportunity, and you're always great to chat with and always such a great voice in this space. But hopefully it's something that your listeners will enjoy, and absolutely come find us at dunncapital.com. There is a quick little form. I think if you click the performance tab that you have to fill out just so we can send you information. So that would be really helpful. Or you can always send us an email at info@Dunn Capital.
Jenny, I appreciate it.
We'd love to hear from everybody. And thanks so much, Mike. We'll talk soon.
I see a time when those awake will understand how to make money in up, down, and surprise markets. Whether new trader or experienced, college student or financial advisor, protecting against a crash or just trying to make a lot of money, trend following offers everyone an answer in uncertain times. To get started immediately, send me an email, michael@covel.com. I will send you the right trend following steps to take along with my free video. But if you want to buy and hold, trust the government and trust Wall Street, this is absolutely not for you.